Hey traders, Shane from GMTfutures. Welcome. I'm going to just walk you through the reversal trade. So this is the Euro US dollar Renko reversal. I've got this set on a 5 brick. So what I want to do is I just want to step you through the actual strategy, and then I'm going to explain a couple of the differences or the nuances of the strategy, because you can certainly customize it to suit what you're wanting to get out of the system, and you can also customize it to suit your risk profile, the level of the percentage wins you want to potentially take. So let's have a look at the strategy basically from the outset. So once we get into a trend setup, and you can see our cyan bricks of printing a trend there, what we're looking for is we're looking for a reversal. So we're looking for the MACD to be making higher highs or that double top, and we were looking for that bearish divergence. So we've got our MACD showing that clearly there. So there's our bearish divergence. We've got price making higher highs, and you can see there we've got a nice little run up. Now as soon as our bricks close below, we get a clear close below the moving average, which we've got there. You can see the reversals tagged. As soon as we get that set up, we're basically in a trade. So there's our reversal trade there. I'll just mark it with a vertical line so you can see it clearly. That's our reversal entry. Close of the bar, or close of the brick, I should say, we're into the trade. Now, that's the initial setup, the initial reversal setup on a short side. Now, once we get and I've got it kind of marked here with the eclipse, but you can see here we've got a dynamic resistance line that's printed. So this dynamic resistance is what we call our pyramid setup. So what we're ideally looking to do is we're looking to have a minimum trade movement. So I like to see around about 5 bricks move. So if we've got this set at obviously at 5 pips, then we're looking for a 25 pip move as our minimum move, and then I'm looking to get into the trade once we've had that minimum brick move, and that's what basically we're looking for, that pyramid entry. So we would start with one lot here on the first setup. So there's one lot entry, and then this second trade setup is our second lot. So what it means is that our stop is obviously dynamic and moving, but this would be our second lot, and you can see there that we've got our second lot in. And then as we get another brick set up on the short side, or another red resistance, dynamic resistance, we've got another opportunity to apply another lot. So there's our third lot into the trade. So that's our third lot, and so we're 3 lots in. Do we get another opportunity? No, we don't, because obviously this thing sets up a potential long setup here. You've got price making lower lows, and you've got divergence coming through on our MACD. So that initiates or sets up the potential for a potential long setup, and we get that long setup here. So we've got a long reversal entry there. So that means that our shorts basically go out here at market on this bricks here. That takes our shorts out, and we're now long. Now that's one way of trading the strategy, and I'll just show you how that's performed over the last 6 months. So if we have a look at our strategy performance report, you can see that, I'll just go to here, you can see our equity graph is not too bad there. Our overall performance over 6 months has been about 31,000 on a full standard lot. It's running at about 38%, so just under 50%, and 362 trades. But the great thing is the average trade net profit is about $87. So you've got almost a 3-to-1 on your reward to risk. Now that's okay, but that's not the only way to trade the reversal strategy. The beauty of it is that we've got a number of ways in which we can trade this strategy. So let's have a look at the other way you can do it. So that's basically adding lots in and then using this moving average to get you out, so a trailing stop. Now let's go to the strategy report, so format strategy, and we'll just click on that, and we'll say, right, well, instead of going into the trade and instead of using the moving average to take us out of the new setup, what we're going to do is we're going to we're going to mark it out on the opposing level of support or resistance. So once we get an opposing level of support or resistance, we're going to mark it out of the trade. So what that means is that we're going to be taking smaller profits, obviously because we're not using a trailing stop, but we're going to be capturing profit as we go. We're going to leave our larger trade setup to go out for the duration of the session, so a trailing setup, and we're going to be marketing out on our trades based on. So let's have a look at how that changes the dynamic of the setups. Well, what it means is that we still get the short setup here. We've got our original long setup, that's okay. But what it means is that we've got a small profit or a smaller profit taken there. So we've locked in profit on the first trade or the second lot, the second trade. And then on our third lot, we lock in profit again on that lot as well. Now, at the moment, I've got the trade set at going in, basic marketing in as soon as the resistance bar. Now, what I can do is I can change this slightly to take us out right on the resistance line. So I can basically have my target, instead of marketing opposing support resistance, I can change that to false. And I can say target the opposing support resistance, and I can set that to true. So once I get that opposing support resistance set up, it has to hit that bar or that support level and it'll take me out. So that's another option I've got for my trade setups. Now what that will do is that will give you a slightly different result. So you can see here that the equity graph there is not quite, you're not getting quite as much money, because remember the other one had us in it at around about 31,000. This is the performance on this one is around about 27. Interestingly, the average trade net profit is lower at 75. Our other one was 87, so we've dropped off. But the actual winning percentage rate is 41%. So let's have a look at if. So there's a significant difference there in the win rate, because the other one was 35, wasn't it? Around about the 35%. So let's just go back here for a second and change this to just change our setting just slightly. We'll go to true there and turn this one back to false. So we're not trying to hit the resistance or support. We're just going to go close, and we'll see what that does to our win rate. So I think that'll improve our win rate slightly. Yeah, it does. So for those of you who want a slightly better win rate, that's your option. You can actually customize a strategy, so you're still picking up those growth trades. They're the long ones, the ones that you let run, but you're actually improving your win rate by, it's not quite scalping, but you're actually just taking smaller profits on the way. Now remember, we don't want to do reverse position sizing where we take the trade and we're loaded up on the first trade, so if we get stopped out we get a full loss. We want to slowly scale into these to get the most out of it. So by doing that, what we're doing is we're actually reducing our initial risk and compounding or adding to the trades to take advantage of the overall move on the system. And you can see there the long setup here sets up. It doesn't give us, it gives us a long pyramid there as well, and you can see there a nice little winner there as well. So this strategy works beautifully on the Euro US dollar. As I mentioned before, you can customize it to suit your not part of the GMT mailing list, then you definitely want to jump on and put your name. If you go to the blog www.GMTfutures.com, you definitely want to add your name to the mailing list so we can send you out the regular video updates. So thanks for your time, everybody. Have a super day, and good luck with your trading. Cheers.